To all our viewers from the United States, Korea, and around the world, welcome to Global Money Talk by SamProTV, live from the floor of the New York Stock Exchange. I'm your host, Remy Blair, and you are watching our live broadcast from the financial capital of the nation in New York City. We'll begin the hour with the market briefing and live coverage of U.S. markets, and then we'll bring you market insights for an in-depth conversation with a market expert. Today for the market briefing, we have Tai Wong, independent proprietary trader, so make sure to stay on for the entire show because for market insights, we'll be welcoming Dan Ha, co-founder and portfolio manager of Karani Asset Management. Hi, happy Monday. Thank you so much for joining me.
Always good to be here.
Well, first and foremost, we're seeing U.S. markets higher, but this does come after the sell-off we saw on Friday. So I think it's a good time to do a quick market check as we kick off today's show.
Yes, absolutely. So I think we had some good news over the weekend, specifically about Boeing, which we'll get to a little bit later. But if we look at the markets right now, the equity markets certainly seem a little chippier this morning.
Mm-hmm.
Dow Jones up about 1%, 27 advancers, down only 3 stocks declining. The S&P 500 up 0.6%, with a vast majority, about 440 of the stocks up so far this morning. The Nasdaq is up 0.5%. So the equity indexes look fairly good. We also let's have a look at fixed income. Fixed income is really interesting because I think we mentioned on Friday that the stock market took the employment report relatively poorly in that it wasn't weak enough to give them a 50 basis point cut. So the stocks that you mentioned were down substantially, but then the bond market seemed relatively happy about it and rallied reasonably strongly. So the treasury curve is just up a little. The yields are backed up a little bit, 2 basis points in the 2-year, which is at 3.67. I think that may be a little bit overvalued in terms of, do we really think that Fed rates are going to come down that quickly? So I like to think a little more, figure out a little bit more of what the bond market's thinking. The other thing I might add, and it started last week, but definitely see it today, is the 2s and 10s. The market is no longer backwardated. The 10-year yield is 4 basis points above the 2-year yield, so we're back at sort of a normal yield curve, and we'll have to see how long that lasts.
Well, Tai, as you mentioned, that jobs report that we got out last Friday, headline non-farm payrolls coming in below expectations, but still above 100,000. And we also saw unemployment fall to 4.2% in August from that 4.3% we saw the prior month. And when we think about market action following the release of that July jobs report, we saw that volatility on August 5th. So what do you make of the sell-off we saw, and are you convinced when we see this recovery in today's session, at least partial?
So, it's probably worthwhile to wait till how we close at the end of the day. If we can close with some strength, then I think market participants might think that last week the market just came back. They know seasonally September is often the worst month for stocks, and it was kind of a sell-off week. Concerns about the employment report primarily. But now, if it comes back, the market will breathe a sigh of relief and say, okay, maybe we don't get 50 basis points, but we'll get is 25 basis points and sort of a dovish directive. So I can imagine Jay Powell saying, if data continues to come in the way that we see it, we see room to continue to become less restrictive. And the market goes, okay, we'll just get a string of 25 basis points into eternity, almost, and the market can be pretty happy about that. So I think it's a sigh of relief, and we'll have to see how we end today. And then obviously we also have CPI later this week. Actually, it's a good time to take a quick look at the calendar. The calendar, economic release calendar, the week after payrolls tends to be very, very slow. But what we do have this week is CPI and PPI, and they'll be the last 2 big pieces of data that the Fed gets before their meeting that starts Tuesday and then ends on Wednesday next week. So CPI will probably give them CPI tends to be relatively not that volatile, at least in recent months, and I think it will give the Fed will give the market some relief that everything is going according to plan. And we also have jobless claims, but now people are starting to really focus on the Fed next week.
And as you mentioned, Tai, as we head into the rest of this week, we get CPI data and PPI. And of course, given the fact that the Fed meeting is next week, as you mentioned, from the 17th to the 18th, the Fed officials are in a blackout period in terms of being able to speak and offer any insight into what they might be thinking for projections. But that also means that we will be getting that statement out from Powell next week following that meeting. And I'm sure you're going to be paying attention to the economic projections as well as the language coming out from Jay Powell.
Absolutely. The things that are most important is the what they call the dot plot, which includes, as you mentioned, the dot plot is part of the projections. The projections also say where they see unemployment, where they see growth. But the market will focus on the dot plot because they will want to see immediately how many rate cuts the Fed governors and local Fed presidents have put in for the rest of this year. Is it 2? Is it 3? Is it maybe 4? They're not going to get 4. But is it 2 or is it 3? And I think that will change the mood of the market substantially. The other thing that the market's looking for is I think they were looking at 4.1 or 4.2 as of June as the end of year unemployment rate. We were already there, so do they take that higher? And then also that'll be the first thing they look at. And then 2:30, the press conference, typically lasts 45 to 50 minutes, will be, what is the directive? Is it guarded? Or is it going to put the market at ease? So those are the two things that are really going to matter next week.
And Tai, it's quite amazing because at the end of last year, there were so many expectations heading into 2024 for rate cuts from the Federal Reserve. And here we are at the beginning of September. We have yet to see a single rate cut. So expectations are high, as you mentioned. So we'll have to wait until next week to see what happens.
Yes. And you're exactly right. The market loves to get ahead of themselves. Or itself, I suppose. At the beginning of the year, it was we're going to get 6, 7 rate cuts this year, and then in May it was like we're going to get no rate cuts this year.
Yes.
And now we're going to get 4 rate cuts this year. The market is sometimes I think of it as an unruly adolescent, and it gets moody, and it gets happy and unhappy, and we will see in the fullness of time.
Well, I think that's a good analogy there, Tai, because if you think about teenagers, adolescents, and how moody they are, you've seen lots of market cycles, but they always say that without a crystal ball, you can't tell what's coming. And I think it's a good time right now to take a step back and look at the different sectors, at least for the major equity averages, because as of the end of last week, we saw the S&P 500 close up by 13.4% for the year, the Dow up by 7%. And when we look at the individual sectors for the S&P 500, we're seeing consumer services up by 13%, but interestingly enough, we're seeing IT and financials up by 17% as well. So tell us what's going on here, and it does seem like quite a divergence compared to a month ago.
Yeah, I think I think technology has been a big driver of the rally. I think there's still a lot of confidence in technology, though we've seen tremendous volatility in the big names like Nvidia and Broadcom that we looked at last week. They had pretty good earnings, but they fell a little short in the outlook, and the market sort of panicked a little bit on them. Broadcom. I'm not sure that was really maybe worth looking at Broadcom right now. Where is Broadcom? Let's have a look.
Let's take a look at Broadcom shares because we did see that major sell-off last week following their earnings report.
So can we get do we have a live shot of Broadcom? But while the team is trying to get that up, the market is still enamored. Certainly, the retail market enamored of IT. Financial services, I think, are getting a better reaction from the fact that rates look like they're going to definitely come lower, and they'll hopefully loosen up some of the things that are clogged up in the market. So financial shares, I think, when rates are high and economic activity isn't as strong as it normally is, you're not going to get that as good a reaction. So I think you're seeing part of that in terms of financial stocks.
And when we take a look at some of the big tech names that sold off last week, right? We had NVIDIA, they had a major sell-off at the beginning of
Yep.
last week, and that was quite a significant amount in terms of market cap being wiped off. But what do you think of where we are with those big AI tech plays right now?
So I can't quite decide, and of course, maybe the audience isn't quite looking for that. But if I look at NVIDIA, they had a good report. They had some problems with one of their big chips, but looks like they should be able to iron that out over time. And what you're seeing is it's having trouble at the 125 to 130 area, and it's backing off, and it's holding around the 100 area. And I think the market is looking for what's the outlook going to be, and I think the Fed will help us with that in
Okay.
terms of, do we see an easing Fed, a happy Fed. We like where we are, and we'll get growth again. And so NVIDIA, will continue on a new upward trajectory. And the same thing with Broadcom. I mean, I think Broadcom down a bit today as well. And I think perhaps we're not going to get resolution. There you go. It's down 1.4%. And I've been thinking about Broadcom and thinking, is there good value here? I think this is a really good name. One of the top 10 stocks by capitalization, or very close. And just like NVIDIA, the field in front of it has good running room. But I think I need to see the market I need to see the Fed. I need to see how the market feels about the market overall going forward, because I think this is the beta is going to be close to where the market is. If the market's happy, I think these will continue to go up, and if not, it may be a little bit problematic. So I think there may be value here, but give it a week. I want to see I want to see this next week.
Well, we'll keep our eyes on price action for Broadcom as we head into the rest of this week. But before we move away from the tech sector, all eyes are on Apple today, especially ahead of their event taking place in California. So that event is scheduled to kick off at 10 a.m. Pacific time, so that means 1 p.m. Eastern time here. And they are expected to announce product announcements as well as more insight into their Apple Intelligence capabilities as well as AI. So what are you paying attention to when it comes to that name?
I think you hit on it right there in terms of where is the next growth driver going to be for Apple, because in recent years they're functionally been a phone company. It really is the iPhone that drives everything. But if they can get into anything into AI, anything into where AI can drive perhaps more sales or can drive more revenue and has a good outlook, I think that's what the market really wants to see. They'll usually have some new products or updated products. They'll be ready to ship for Christmas, but functionally it's still a phone company. But if they can show the market that they're moving into, have new advances, and they can take advantage of the AI or ride an AI boom, or certainly from the market's point of view, I think that's where they'll get the biggest bang for their buck. So we'll see.
Yeah, we'll see as we head into the afternoon what comes out of Apple. So they are expected to unveil their iPhone 16 with AI capability, as well as new versions of the Apple Watch, as well as their AirPods. So that could mean lower prices for their current lineup of products out there.
Right. They'll usually cut their prices a little bit. I just had to buy a new iPhone for my daughter, an iPhone 15, because hers is 3 years old and the battery is starting to be not as good as it used to be. But I'm just really glad that they have the USB-C charging cable now.
Yeah.
So it's I think a little more of a reliable cable. That's the same cable that I use, so she can always borrow mine.
Well, I think Apple iPhone 15 is quite advanced. I'm still on 13, but perhaps I'll upgrade this holiday season. We'll have to see.
Right.
Well, moving on now, Tai. So let's move on to see what's behind some of these market moves. As you mentioned, we have economic data coming out later this week, but we will also be paying attention to other things as well. So in terms of what you're watching as we kick off this new trading week, do you want to enlighten our viewers?
So the thing that really sort of raised my eyebrows, the big story of the weekend, maybe, at least domestically, is Boeing, who's had a lot of trouble recently, has come to a 4-year agreement with one of their biggest unions for a 25% pay hike over a course of 4 years. That's a lot.
Yeah.
You know, I'd like to get a 25% pay hike over 4 years. That's a lot. And I think this was really important for Boeing because of all the trouble that they've had recently, from the 737 Max to nearly losing a door on the Alaskan Airlines flight. They didn't need any bad news, and I think the new CEO wanted to make sure that they were producing planes on time, making deliveries on time. So I think he needed this. And in addition, they promised to make a lot, some of the whatever the next generation plane is after the 737 MAX 9 in the Seattle area. Now, nobody knows when the next plane is going to come, but so that's important. But 25% over 4 years, I think the union's going to approve this. The union leadership really likes it. I think it's one of the best deals they've had over some time. So if they don't approve this, and I think it's a low percentage chance, I think that'll be an issue. And I think if we can, Boeing is up, I think, substantially today. If there's a live Boeing chart that we get, Boeing was leading a little bit earlier. So Boeing is showing up about 3% on the day. You don't see it right in the chart because it opened higher because of the news over the weekend. So Boeing was looking at the stock price. It's certainly well off its highs. I'm not sure if I'm quite comfortable buying it here, but I'm thinking about it because if you look at Boeing, I know they've had a lot of troubles, and there's some documentaries that showed that the focus of the company went away from the engineers and building great planes to better financial results. There was a great documentary with it. It was a little painful. They said it used to be the slogan, if it ain't Boeing, I ain't going, and people were laughing, doing a little bit the opposite of it. But it was a great American company. I think because there are not too many jet makers, really, other than Boeing and Airbus, that Boeing has a certain sort of amount of armor in terms of they're going to get more support if there's trouble than they might otherwise, which is why I'm thinking, is there some value in Boeing here? I'm not as confident as I am perhaps in something like a Broadcom, but I think there may be value here. If not here, maybe another 5 or 10% lower. I think there may be value in Boeing. Sentiment was really, really down on the lows. I think this is turning sentiment a bit, so I'm thinking about it. It's on my list.
Well, between the management change as well as the way that the company has addressed some of the issues, we'll have to wait and see when it comes to this name like Boeing. So I understand that while we're on the topic of stories that you're watching, you've been paying attention to employment figures, labor market data, in particular what's happening with the IT sector. So what's going on here, and why do you think this is happening?
So anecdotally, the hottest thing in the market for years was software development. Everybody wanted to be a software developer, and I remember back in the old days, antediluvian period, when I was at Harvard, the most popular major or concentration, as we called it, was government or political science. Well, I think computer science overtook that as the most popular concentration probably 15 or 20 years ago, and remains so today. You couldn't lose in software development. But what we found, what I heard anecdotally from kids, people who went to church with me, and just other professionals in the market, is the kids coming out of school and having trouble finding jobs. As a matter of fact, some kids who had offers, some very big name companies in the Mag 7 to do software development were asked to say, well, either had their offers rescinded or had said, take a year off and we'll hire you a year from now. And it was really kind of startling for these kids who thought that that software development was really the way the future couldn't be beat. And this weekend, the Wall Street Journal reported that IT unemployment is actually at 6%. The overall unemployment rate is just over 4%. So that it's still a sector that's going through a lot of change. I think AI has made some of these jobs, perhaps redundant, perhaps less necessary, but it really sort of raised your eyebrows to say that this big driver of employment growth is actually at 6% employment. And there was quoted in there and saying if you're looking for a job, a really high-paying job in software development, think about it again. So a little sobering for. Now, I'm not saying you shouldn't learn to program. I think that's actually for many reasons, especially if you want to get in the financial markets, a great place to be. But it's not sort of the pass, go, and collect $200 as it was for some time, especially after the pandemic.
And if you think about students who are set to graduate and they've been given an employment offer and that's rescinded, that can be really challenging and really tough.
I mean, that's just a shot in the gut. Your parents may have paid $80,000, $90,000 a year. You have a job, everything, everything's great, and all of a sudden, sorry, no job. I mean, I can't imagine, at that age, all of a sudden you're flailing a little bit. And speaking of some of these kids, they were a little concerned, a little upset. They're young, they're smart, they have a great skill set. They will find something. But that initial, sorry that we have to, take back our offer is tough.
Absolutely. And I think a key term you mentioned there was AI, artificial intelligence. And you think about what's happening in that space and the demand for people who have that skill set to work in that industry. Some of the figures out there for even entry-level positions are, a good 6 figures, aren't they?
Sure. 6 figures or 6 figures with great benefits. Those are really plum jobs. As plum as the investment banking internships, investment banking analyst jobs, and the starting consulting jobs are. They're all equally sought after, equally prized.
And I'm glad you mentioned internships right there, because some of the internships right at these Mag 7 names, or of course in particular even non-public private artificial intelligence companies, the salaries, or shall we say the stipends that these students get for internships are quite staggering and might be above some of normal paychecks.
It is. As a matter of fact, I think a lot of these internships will pay you a prorated version of almost your starting salary just for those 2 months. And if you think of a junior, of the really gifted ones, a sophomore in college, and you're making, just say $100,000, you're making $100,000 a year for 2 months, you're talking a very substantial sum of money that the kids really have a great time with it, senior year.
I know, and it's quite amazing, but I think that speaks to where we are in terms of the infancy of the artificial intelligence sector. And I do want to move on very quickly, since we're very limited for time, believe it or not. I understand that China's central bank, the PBOC, did not buy gold for the 4th straight month in August. Last week you were on the show talking about gold, its use case, its utility, and of course central bank holding. So what's going on here?
So I think the People's Bank of China has been generally they're considered a very savvy market player, and I think they started buying in the 1800s. They bought all the way through maybe 2300, and I think they've said at 2500, it's not such an attractive add to our reserves right now. We have plenty of time. If it comes back down, we'll add, but gold has stayed relatively elevated, even though this is the 4th straight month they haven't bought. Market's bullish. I know that producers aren't hedging. A lot of producers are talking about, we're not going to hedge until it gets to $3,000, which makes me think maybe the 28 or 2900 will be the high, because unfortunately the target for producers sometimes doesn't work out. It'll top out just before then. So for a producer, I'd say your all-in cost for mining gold is probably somewhere in 1,000, 1,500, 1,500-ish range. At 2,500, you ought to be thinking about hedging.
And I'm glad you brought up the price of gold, because given that it touched record highs, even though the PBOC didn't increase their holdings, the value increased, right, of their total holdings. Yeah,
the value of their holdings has gone up tremendously, because their average purchases over the past few years probably 2,100 or thereabouts. So we're at 2,500. Looks great on paper.
Well, Tai, we have to wrap it up. So before we let you go, we are continuing to see the major U.S. stock averages higher. The Dow up by 0.9%, the S&P 500 up by 0.6%, and the NASDAQ up by 0.4%. So Tai, as always, it's been great having you on, and we look forward to having you back on as we head into the rest of this week.
Great to be here. Thank you.
Thank you so much.